It's still negative on the markets, both globally and in South Africa, pretty much flat in South Africa. But let's find out really what it looked like. David Shapiro from Sasfin Security joins me now. Globally, it just hasn't been such a good few sessions of late, David. I mean, you've got, and I would imagine you've got inflation threatening everyone in the developed world. You've got these central banks getting ready to raise interest rates. Is that the real fear that's happening over the past few days?
Absolutely. I think no one's quite sure what the Fed's going to do. We started out that they wanted to have a measured approach, but unfortunately at the moment, they seem to have leaked out that the rates could rise as much as 75 points, in other words, 0.75%. I think the markets at worst, we're expecting about, or at best, we're expecting about 0.5%. So I think a lot of concerns about what the Fed policy is and where it's going to go. We'll know tomorrow evening, but confusion out there, and I think that's why no one's prepared to take advantage of some of these falls and what appear to be very attractive levels or entry levels. I still think that we've got to figure out what's on the Fed's agenda. And Devin, I don't even know if they know. I think that's what's confusing markets. No one's quite sure whether the Fed really knows what it's doing.
But look, it has hurt some shares quite badly. I mean, we've got the like of Sibanye, for example, today, 5% down, Anglo-American. Each of these companies may have their own issues. Nevertheless, you have the mining sector that took a beating, and generally stocks, across the board, taking a beating as a result of this. What are we, 66,000 or thereabout? Just yesterday, I remember that number well, into the 70,000s. I'm exaggerating, of course, but it's quite a dip.
Yeah, we're about 65.6 at the moment, and I think the highs were close to 71, 72. So we're about 10% down on the year, and at one point we were up 6%. So I think if you measure us from the height, we've come quite a lot down. Resources under a lot of pressure. Devin, that's reflecting concerns about growth.
Yeah,
about whether there will be a demand for our underlying commodities. So I think one has to understand that, and again, particularly in an emerging market like South Africa, developing market, deep concerns about inflation, particularly the oil price and food prices, because it does affect our people a lot more than in richer nations. Simply a lot more of our wallet, a lot more of what we earn goes on food and transport, more so than other services. So there are concerns starting to build up, in our market as a result as well.
David, what did you make of the Telkom results? I mean, Telkom's always an interesting share. You had revenue a tad bit down. They still made some profit, but they involved in a lot, and I'm not quite sure whether or not, the share price was down dramatically today. What did you make of those results?
It's unfair. This is a company that's trying to get rid of its legacy business. It wants to move out of fixed line and into mobile, into data, into modern kind of communication. But it's still dragged down by its past. And the problem is that that's hurting profits. That drags on profits. But what is good news is that it is starting to transform. In other words, you're starting to see its modern, its mobile businesses taking over from its legacy issues. But it's going to take a few years. I feel sorry for them because there's no shortcut out of this. I think what might have upset the market is that they continue to delay dividends, for another year. They said they were, and also there's quite a bit of capex that they have to spend, particularly on 5G spectrum as well. But I think overall they're going in the right direction, and credit to them for doing that. They continually getting new customers as well, which is also a good sign. So they are making inroads, but it's going to take a bit of time until they get rid of that fixed line business completely.
And then finally, David, I mean, it's always interesting when a bank, especially when one of the biggest banks in the country releases a trading update, because it kind of gives you some insight into what consumers are doing right now. Standard Bank saying they're going to make a profit, but they're flagging the environment, saying this is going to be difficult for consumers. What did you make of it?
Yeah. You see, Devin, banks really prosper in good economies.
Yep.
Because in good economies, they do mergers and acquisitions. There's plenty of transactions. People are spending, people are borrowing. That's when they make money. In an environment like we are at the moment, they plod along, very careful about lending money. They've got adequate provision. So you can't fault them for the state of the, of the balance sheet. Very, very strong, and they're doing well. But they're not going to prosper in an environment as difficult as this. And the economy doesn't help them. Load shedding puts pressure on business. I think the overall gloominess in the world economy puts pressure on, inflation puts pressure on consumers and so on. But you can't, all I say, our banks, thank goodness, are very, very well run. They're solid businesses, but don't expect anything special out of them.
David Shapiro from Sasfin Securities, thanks very much indeed for talking to us. All right, let's